G'day, I'm Scott Phillips from The Motley Fool. I'm our Chief Investment Officer here in Australia, and welcome to our weekly series we call Stocks in Focus, the series that goes on the Motley Fool Money podcast and our YouTube channel, where our analysts unpack a company you probably know pretty well. Maybe it's in the news, maybe it's widely owned, maybe it's simply important to the Australian economy or the Australian stock market. This is what we do. Every week we lift the bonnet on these sorts of companies and tell you a bit more about them and maybe give you a slight sense of the pros and cons of a potential investment in these companies. And to do that this week, I'm joined by Motley Fool analyst Vincent Wales. Vincent, g'day.
Hello, Scott. How are you?
Mate, I'm very well, thank you. I hope you are too. Mate, we're going to talk about Santos, the oil and gas player. I'm going to get you to tell us about the company. I'm going to say, as I say, give the pros and cons, and I'm going to wrap it up maybe with a thought about whether or not I might beat the market. Let's stick around for that one. Before I do that, let's remind our viewers and listeners, this is general advice only. We can't give personal advice. We're not licensed to. We're going to tell you what we think about a company, in this case, Santos. You need to decide whether it's right for your particular circumstances. Second thing, this is a point in time. I know I say it every week. If you're a regular listener or watcher, my apologies. But we want to make sure everybody listening or watching, whether it's now, whether it's later, some point in the future, they know exactly what to expect from this and, frankly, how they should use the information that we're providing. Too few people do that, unfortunately, in the media space a lot of the time. So this is at a point in time. This is early September 2025. It's a view of the company at that point, based on what we know, based on the circumstances, the expectations that we have. They, of course, may and will probably change over time, so keep that in mind as well. All right, Vincent, let's do this, mate. Let's talk about Santos. Tell us about the company itself, please.
That's an interesting factoid to start off with. It started in 1954. The original name was Santos, I hope I got the name right here, South Australia Northern Territory Oil Search Company. That was the original name for it. Now, of course, it's one of Australia's largest, it's actually the second largest behind Woodside oil and gas producer, with diversified exploration and development projects across Australia, Papua New Guinea, offshore, and the US. It's quite diversified in terms of its operations. Its core operations are exploration, development of its pipeline, production, transportation and marketing of natural and liquefied natural gas. That's LNG. So perhaps its most famous assets well known are the Cooper Basin, Queensland and New South Wales gas fields, the Papua New Guinea project, and liquefied natural gas, and also the one that's coming on is the Alaskan one, which is known as the Pikka project. Not quite sure how you pronounce that. Also, it's one of the, as we move towards net zero, or the intention towards net zero, it's one of the leaders as well in carbon capture technology, which it's developing that field as well. Perhaps of note, just to finish off with, it's recently been subject to a takeover bid by a consortium led by Abu Dhabi and a few other people, I think also including Carlyle Group, the commodity group within that. So that kind of obviously throws a bit of a spanner in the works. It depends how this pans out. I think the premium was quite high. Yeah.
Yeah, that's right. Definitely muddies the water in terms of the investment view. But let's try and go through at least the pros and the cons. Let's assume the takeover itself is a moot point for now. Let's think about the company itself, and we'll get back to the investment or maybe the valuation. But let's talk about the pros. Why would our viewers and listeners consider investing in Santos shares?
Well, as exposure, first of all, the obvious one is to the growing demand for energy. It doesn't look like it's the demand for energy seems to be going up, certainly not down. We're moving more towards a digital economy, automation, those kind of fields. There's growing demographics, obviously, in emerging economies that want the same kind of energy benefits that we want in more developed nations. So there's definitely consistent and growing demand for energy. It's geographically diversified. It's got its assets quite across the world. It's not relying on one successful liquefied natural gas field to make it a success. And in the pipelines, as I mentioned Alaska before, it's got some quite attractive potential new product, which is the lifeblood of this kind of company coming down the pipeline. And as I mentioned before as well, it's a leadership in carbon technology, which when we do finally meet net zero, it's going to participate in that as well. It's not just purely fossil fuel exposure.
Nice. A lot going on there. Lots of potential opportunities. I did like the down the pipeline pun. Of course, a lot of gas is sent via pipeline around the country and around the world. Now let's go to the cons. So you talk about why you might want to buy shares in the Santos. Maybe you want the energy growth. Maybe it's about diversification. Maybe it's about the new project. There's some opportunities there. What should our viewers and listeners just be a little bit mindful of? What should either keep them away or at least make them think about balancing the risks and rewards? What's on the cons column, mate?
Well, like all, if not most, if not all, commodity companies, it's very cyclical, and also they're is known as a price taker. They have to take the price of the commodity in the global markets, so they really have to make their create their alpha, differentiate themselves through efficient cost management and selecting those projects, as I mentioned, down the pipeline, which have the best risk reward and the lowest kind of unit cost for generating units of energy. Again, high capital expenditure. It's not like a software company. You need all these offshore oil rigs and all that. So that's high risk and capital intensive. So that obviously hits the bottom line as well. There's competition. It's a globally competitive market. Everyone wants to produce energy for cheapest possible price. So, you have to kind of keep up to date with the new technologies, excuse me, and the new projects. And although I mentioned diversification geographically, of course, in terms of its product, it's not very diversified at all. Liquefied natural gas, LNG, and gas in general. And of course, you can think this is a pro or a con, but as I mentioned before, the takeover bid, if you're thinking of investing, complicates the investment decision-making process as well. So.
It really does. And this is where I'm going to try and draw you to a view. But before I do, I'm going to do the usual ad and say, if you're watching this on YouTube, thank you for spending your time doing that. Please do me a favor. Like this video. If you got this far in, hopefully you're enjoying what we're saying and what information Vincent's sharing. Please give us a like. It's obviously good for us, but it also helps other people find the video. And if you want more from the Motley Fool, here's a quick tip. We've got a stock of the month coming this Friday. It's actually one of our current recommendations. So you don't miss that one. Hit the subscription button, hit the notification bell, and make sure. Also, by the way, go and check out our Motley Fool Money podcast stream. We do 3 episodes a week, including this one. So lots of good stuff on the Motley Fool Money podcast. If you like your podcast, check that one out. And if you're on the podcast now, hey, jump over to the YouTube channel, have a look. Or maybe, you don't necessarily want to see me in living color, but Vince is doing a good job. Plus lots of other great stuff as well. So lots from the Motley Fool, all free, by the way. So jump in and grab some of that good stuff. All right, Vincent, back to then what we're talking about here, mate, which is Santos as an investment. You mentioned that takeover, and of course, this video and audio may be obsolete pretty quickly if this goes through. But given the current price, given the current circumstances, given those pros and cons, I'm going to ask you to take a 5-year view. Of course, we know this might be cut short sooner than that based on what's going on. But as an investor, do you think this is at the current price a business that's likely to beat the market or lag the ASX?
Well, unusually, I work normally with commodity companies. It's too often to judge because of cyclicality. But in this case, I think it might actually, if modestly, outperform the market.
Nice.
And the reason I'm saying that is down to Economics 101, which is supply and demand.
Right.
Now, normally when you get cyclicality, you get increased demand. For example, automation, as I mentioned, globally, emerging markets coming through, you get more supply. But we've seen this new, mainly driven by government regulations on net zero, which will almost certainly reduce the supply of traditional fossil fuel energy sources. The problem is that when you look at the dynamics of it, to hit those net zero targets by 2050 and also the 2030 targets are looking increasingly challenging. And what that means is that you've got restricted supply, because often companies such as Santos go, should we invest in this new project? Well, if the government says we can't do it or shuts us down after 5 years, is it worth the risk reward? So you've got this global environment where you've got a huge increase for demand for energy sources, but potentially a reduced or impaired supply, which would suggests that it could outperform over that period, if modestly. Now that's
very good.
Yep. I was just
Go
going
on.
to say, slightly that's unusual for a commodity company because I'd kind of go over 5 years. It's cyclical. It's notoriously hard to judge commodities over five years. But in this case, I'm going to stick my neck out slightly, I think. So
Very good. I like it very much. That's a great summary of Santos and the oil industry in general, oil and gas industry in general. Talk about oil and gas, by the way, they're not exactly interchangeable as energy sources, but they are substitutable to some degree. So we do talk about them in the same breath. And you're right, mate. The change in energy demand and the potential restriction of supply do make it a fascinating area to be looking into. So, Vincent, thank you for sharing your view on Santos. Viewers, listeners, thank you for being with us for a little bit of time. We hope you've enjoyed this episode. Until next time, full on.